Many investors are focused on the aspect of fees. What is it costing me to do something in this particular investment? I think it's a great question. We all know people have to get paid. And at the end of the day, if you don't know how they're getting paid, there's probably something more that you should learn. I'm going to tell you today that it's not just fees, it's fees and expenses. One is obvious and known, and the other is stealth. We're going to break it down for you so that you can understand what it is you're really paying in an investment. And when somebody tells you you're not paying anything, you need to be very, very, very careful and understand what Jerry Maguire taught us years and years ago. Show me the money. Well, good morning and welcome back to Consider This Program. I am your host, Joe Clark.
And I'm Aaron Rheaume,
our Director of Financial Planning, not just Aaron Rheaume. So happy to have you here. We've got a planning team of about 8 different people. Mm-hmm. Some lead advisors or senior advisors, I like to call them, some associate advisors. But we all come together and we take turns being on the show. And it's always a pleasure to have you along, to be able to do this and to represent where we are.
I appreciate it. It's fun.
It is fun. We're going to talk about. We're in the theme of power couples this week. Is where we are. And one of the people on the team titled this "The Truth Behind Wall Street's Hidden Agenda."
Okay.
I don't think it's necessarily hidden.
Yeah.
I just don't think it's well disclosed.
It's not known.
It's not known. It's a different thing. So I'm going to start off with the Fiduciary Focus. Aaron and I are both licensed legal fiduciary people. We have to, by law, treat your money as if it were our money, and we were in a similar situation. We don't sell any products. We manage money, and we do the financial planning around that to make sure that your money is actually going in the financial journey or the direction that you really want it to go. So when I wake up in the morning, when Aaron wakes up in the morning, our team is looking at 4 different areas of life. And they're in this order for a very particular reason. It's risk and volatility is first. Mm-hmm. Fees and expenses are second. And remember, those are 2 different things. That's what this whole segment's about. Third is taxes, but it's both taxes today and tomorrow. And then last but not least is real return. Real, anytime you hear that in the financial world, simply means we're talking about inflation. What do I get after the inflation rate really comes in? So, well, Aaron, why don't you talk real quick? What would you say are the difference between fees and expenses in a typical investment?
The way that I describe this to the families that come into the financial enhancement group would be the fees are your known cost. So think back if you're a homeowner and you've purchased a house, you knew going into that home purchase the purchase price of the house. Could have been $150,000, $200,000, whatever the home price was. You knew that's what you were buying the house for. The expense side, Joe, is all of the unquantifiable stuff that comes along with home ownership. You need to have the roof repaired, water heater breaks. Those are things that you can't really associate dollars with over time, and it adds up. The same thing in the investment world is you have known fees, but you also have expenses. There's expenses to own mutual funds. There's expenses to get into annuity contracts. There's a whole lot of expense side that you're really not shown that really needs to be peeled back when you're looking at your investment portfolio and seeing how things are structured.
If you're really going to try to do this on your own, and again, in all fairness, if you want to do this on your own, if you want to be your own fiduciary, that is your business. But if you're looking to hire a fiduciary, that's our business. And that is our job, is to peel it back. If you're going to do this for yourself,
yes,
you've got to be able to peel it back. So always focus on the slew of opportunity for Wall Street driven environments to be able to make money. It is okay. Bill Nelson, one of my old friends from years and years ago, he's passed away. But Bill used to tell me, if you think paying for professionals is expensive, wait until you pay for an amateur.
Oh, yeah.
Right? And I mean, he was really, really serious about that. So let's talk about, what was that song when I was a kid, Junction, Junction, what's your function, right? And they'd take a bill in another show all the way to Washington, how it got passed. That's what we're going to do today with that. So there's 4 different layers, if you will, before you get to Wall Street in any investment you buy. So you buy a stock or you buy a bond, right? You can buy those individually, right? And there's a thing called a trading cost.
Sure.
Right? So talk to me about trading cost.
Trading cost back when, in the 80s, used to be a few $100s to buy or sell a stock. That has...
a lot, which was 100.
Okay.
You'd pay $300 or $400 to buy a lot, 100 shares.
And over time, that cost has gone down to where now brokerages like Schwab and TD Ameritrade don't charge any fees to buy or sell something.
For most people, we don't have to pay because of our contracts. That's true. But that is something that you have the ability to negotiate. We have no cost when we go to buy a stock or a bond. It's not entirely true.
There is a bid and an ask price.
There you go.
So you can...
And what's the space between the two?
The spread.
The spread. And that's how Wall Street gets paid. But let's take this thing and make it a bill, right?
Yep.
So there is a stock. And most of America still doesn't own individual stocks. And that's primarily because the majority of money is inside of 401ks. And inside of those plans, you're usually stuck in a mutual fund environment, right? So the stock is going into a mutual fund. Now, here's where the lies, or not so much all the truths, begin to come. People will tell you, well, there's no expense to get in a 401k because a quote-unquote broker is not making a commission to sell you the mutual fund. In many cases, that is not accurate. It will eventually go away. We're not there yet. There are indeed people who get paid for the money that you put in the 401k. And on top of that, they get paid different amounts depending on the investment choices that you make. That goes into a moral hazard, in my opinion, as a fiduciary, but that's a whole other conversation, right? So we've got the little stock, we got the little bond, and we've now put them inside of the mutual fund. Now, the mutual fund has a manager.
Sure does.
Do you suppose they work for free?
Absolutely not.
I am philanthropic, so are you, but that doesn't mean we work for free. Right? Neither does that manager or that team of managers. So think about a custodian. A common one we would think about is Fidelity in terms of the 401k. Fidelity, the Johnson family who own Fidelity, they want to get paid.
Yeah.
Right? Fidelity wants to get paid for all of their funds, right? A little bit. And then you've got the manager inside of the particular mutual fund that's getting paid. Now, can you go to Fidelity and not pay a commission? And the answer is yes. Right? Fidelity has big buildings in expensive places. They are not working for free. So how are they getting paid? How are they hiring somebody the caliber of Adams and Andrews that are on our team to come work for them and to be in this environment? And the answer is real simple. They pay them a lot of money, right? And that lot of money actually comes from inside of the fund. It's one of those expenses that's attached to that. So it changes every year. So they may tell you in your mutual fund that you have a 0.65 or a 1.25 expense. That's a known number.
Sure.
Right? And then you read the prospectus, which I know you don't do. I'm probably the only sick person you've ever met that's really read more than one, right? And Adam probably has too. That's not fair. But when you go through and you get to these little words like and/or marketing expenses, and/or this, or this operating expense, those are the things like the water heater, the roof repair that Aaron talked about, that are not quantifiable when you first buy a house, that get added into the picture.
Yeah.
Right? So you've got the product. You've got the person who's running it. You may have a broker who got paid a commission to convince you that that was the right mutual fund to buy or the right variable annuity to buy. They're getting paid, right? And if they work for a big insurance company, the insurance company is getting paid.
Sure.
Right?
And some of those companies have upfront sales charges.
Absolutely. Most of them do.
Yeah.
But let's go to Wall Street because most people really don't understand the spread.
Okay.
So in 1995, Wall Street traded on average about 200 million shares of stock a day.
That's a lot.
It's a huge, 200 million. Hard to even imagine. Aaron, you got one statement a year from your 401k.
Really?
You had no access to online information, right? So once a year, they would tell you what your valuation was. It's 1995. It wasn't that long ago, right? There were about 7,500 stocks that were available to trade at that point in time that serious investors could buy. I'm not talking about penny stocks and all the other garbage, right? But about 200 million shares a day that they would trade. You had access to your information one time a year. If you had a brokerage account, which very few Americans did, it was far less than 5% of the population had one of those accounts. But if you did, you got information quarterly, assuming you had activity. And that didn't mean a dividend, right? So all of a sudden, Wall Street, and it's a not-for-profit entity, by the way, the New York Stock Exchange. But the president at the time, who was running the New York Stock Exchange, petitioned the SEC and said, Joe and Aaron could not do their job as fiduciaries if they didn't have access to your data. And which is true. If we didn't know what was going on, we could not have managed money effectively every day. And so, hey, he convinced Wall Street, or he convinced the SEC, that Aaron and I should have to mail you a statement, at least quarterly, and monthly if there was activity. And then we all know the story of now you can look at your phone and check your market 10 times a day if you want to. You shouldn't, but people do it all of the time. Right? So what happened is we fast forward to 2021 is on average, we're not trading 200 million shares a day. We're trading between 3 and 4 and sometimes 5 billion shares a day. Now, anybody with any logic would go, now, wait a minute. You go from 200 million with 7,500 stocks to, let's just call it easy, right? 3 billion shares a day. Now you're at 3 billion shares a day. There's got to be, 15 times more stocks? No, there's 7,200. There are less stocks today than there were in 95, and yet the volume's doubled. And here's what I want to get you to understand as you take away this part of the segment of the show, is to understand that the only thing that changed was access to information. We are trained to believe the more information you get, the better decisions you can make. And that is true in your hobby. It's true in your occupation. It is not true. I don't care if you give me information every day about my Jeep. I am still not going to understand how the little burger runs.
Yeah.
Right? I got gas figured out and I can push the button. Right? You've told me every day does not mean I'm going to know something different every day. My interest in the mechanics just isn't there, right? And in Wall Street, what I have found is people have a serious interest about their money, but they don't have an understanding of how that spread works. And Wall Street's hidden agenda, if you will, is to figure out how to get more things bought and more things sold so they can take that little space out of the middle, what Aaron called the spread, and figure out how to build big buildings and say that they have no fees. It's a very, very clever idea. I should have thought of it myself. Hey, you're listening to Consider This Program. I am Joe Clark, your host, along with Aaron Rheaume. He's our Director of Financial Planning at the Financial Enhancement Group. We would invite you to give us a call at 800-928-4001 or go to our website at yourlifeafterwork.com. Get signed up for our market carver, but while you're there, click the button to schedule a meeting. A Next Steps meeting, it's 90 minutes, complimentary. Aaron and our team will sit down with you and give you things that you should consider today, things to consider in your future, and if we choose to partner together, what FEG will do for you in the future.